Ladies and gentlemen, let's talk about a type of investment that you might not be very familiar with, and that is a category known as special funds. What are they and how do they work? If you've only heard about the money market funds, then here is an opportunity for you to learn about something new. Welcome to Moneyversations. So, what exactly are special funds? In simple terms, they are a type of investment where people pool their money together and let a professional fund manager decide where to invest it. It's part of what we call a collective investment scheme. And I know you are already thinking, aren't you talking about the money market funds with that kind of definition? Well, all are part of the collective investment schemes where many people bring their money together to have a fund manager invest on their behalf. But special funds have their own unique twists. So, unlike collective investment schemes that focus on the usual bonds and bills and fixed deposits, special funds are tailored for people that are looking to invest in less traditional areas that include shares, forex, equities, or even derivatives. A good example here in Kenya will be the recently launched Oak Special Fund, which I will soon do a review of, or the famous Mansa X, both of which focus on generating higher returns by exploring a broader range of investment opportunities. One thing to note is that the special funds typically cater to investors who want a little bit more than what they get from the regular options, such as the money market funds. And these are the people who want to diversify their portfolios and are willing to take on some additional or extra risk for the potential of getting higher returns. So now, special funds don't just operate on their own. They are closely monitored and regulated by the Capital Markets Authority. And this is to ensure that they are following the rules and are protecting the investors. And just like the money market funds, there are three main players who are involved in these particular funds. And the first one is the fund manager. This is the professional that is responsible for managing the investment and making decisions based on that particular fund strategy. And number two is the trustee, who is an independent party that monitors the fund's operations and ensures that it's being run according to the rules and regulations that have been set in place. And lastly, the third one is the custodian. This is usually a bank and is responsible for holding the fund's assets in a safe place as they come in and on their way to respective investments. So what are the benefits of investing in special funds? Why should you put your money there? So for one, they are professionally managed. And because of that, you don't need to have extensive financial knowledge to know where I should invest or do I don't know what. The fund manager will take care of the researching, selecting the investments to put the money into, and making decisions using their expertise to try and maximize the returns while they are managing the risk to the lowest possible. And number two, because these funds are often invested in high yield assets, they have the potential to provide higher returns compared to the more traditional investments like the money market funds or the fixed income funds. For example, while a money market fund might focus on short-term, low-risk options to invest in, a special fund might invest in stocks or commodities that, although they are a little bit high risk, they also do have a potential to give you significantly higher what? Returns. And another advantage is diversification. By investing in special funds, by the way, you're getting an exposure to so many different types of assets, some of which you couldn't have gotten access if you are investing on your own. For example, Mansa X allows you to tap into trading of commodities and currencies, this of Mama Forex and the likes, and this adds a level of diversification that goes beyond what most local funds do give you. However, as with any investments, there are also risks that are involved in these. These special funds can have or do have some higher level of risk compared to the traditional investments. However, as with any investment, there are also risks that are involved in these special funds. You see, these special funds do come with higher risks compared to the other traditional investments, and some of the risks include things like you might not be able to convert it into cash as quickly as possible, and that is why they always come with a lock-in period. And then there's a possibility of things going south, unlike the money market funds or the fixed income funds, and these are some of the risks or things that you need to be aware of and know that they are also the things that will make the potential for higher returns to be possible. And last but not least, the regulator has capped the minimums for these funds at 100k currently, but the funds do allow a minimum of 250k like Mansa, 1 million like the OAK fund. But all in all, these funds are well regulated, they provide professional management, and they offer access to diversified portfolios, but they are not a one-size-fits-all solution. So it is very important for you to understand both the benefits and the risks before deciding if these are the type of funds that you want to invest in. I'm going to leave links on the description below, but please make sure that you do your research very well before you get to invest in any of these funds. And in the meantime, I'll be posting a video to tell you the impact of the central bank rates that have just been reduced from 12.5 to 12%, and what it means to both the economy and to you as an investor, because the most important thing we want to know, is it going to affect my investment? So thank you so much for watching, and I can't wait to see you in the next video.